Zillow did it yet again. For the third consecutive month, Zillow actually downgraded their housing market forecast over the next 12 months. I'm going to be actually sharing the actual report that was actually just published today at the time of this video, which is the 19th of July. I'm also going to be sharing the previous forecast, which was published 2 months ago, actually, to share what has changed in their forecast here because they downgraded their home sales forecast as well as home prices over the next 12 months. Also, towards the end of this video, I'm going to give you my honest opinion about this latest forecast from Zillow here. So with that said, let's go ahead and dive right into the video here. And again, this was published on the 19th of July. For July 2022. So it says here their housing market outlook was actually revised down from June, and they're now forecasting for 7.8% gains in home value growth over the next 12 months. And that's from July 2022 to June 2023. On top of that, they are calling for 5.46 million existing home sales for 2022, and that's a 10.8% decrease from 2021. So let's have a look at the previous forecast to see what has changed. The previous forecast actually was published on the 19th of May. I'm not too sure why they skipped June, but they actually, the previous forecast was in May. The one before that was in April. That's why it's three consecutive decreases. Anyways, so in the previous forecast here, which is published in May, they had a downward revision for home value growth to increase by 11.6% over the next 12 months. Compare that to their latest forecast, it's 7.8%. So it went from 11.6 now to 7.8. And for existing home sales, they're calling for 5.73 million for 2022. And at that time, that was a 6.4% decrease from 2021. So from their previous forecast, 5.73 million, now they're calling for 5.46 million home sales. And to give you guys some context regarding this forecast for home sales at 5.46 million, have a look at this. This is according to the National Association of Realtors for existing home sales. So their current forecast at 5.46 million would actually be lower than 2021 by quite a bit because we had 6.1 million home sales in 2021 and also less in 2020 as well when we had 5.6 million houses that actually sold. But the current forecast is calling for a slight increase compared to 2019. 2019, we had 5.3 million existing houses that sold, and now they're calling for 5.46 million. So in regards to home prices, here's what Zillow had to say. Zillow's home value forecast predicts a sharp slowdown in annual home price growth, keyword growth, from the current pace of 19.8% to 7.8% growth through June 2023. So they're calling for home values to increase by 7.8% over the next 12 months. But what I'm kind of scratching my head over is this current pace of 19.8%. I'm not too sure where they're getting this number from because if you go onto any other website, you're not going to be seeing home values increase by 19.8% at the current pace. So let's have a look at Redfin and what they have to say here. So at the current pace right now for houses that actually have sold, according to Redfin right now, the percent increase compared to 1 year ago is only 12%. So home values right now, or the median sold price according to Redfin, has only increased by 12%. Also, when you look at every single week in 2022, we didn't have any week where we had price gains of 19%. Basically, we had the peak of home price gains really in May when we had 16% year-over-year gains in home prices. So I'm not really sure where they're getting this number of 19.8%, but if you guys know, comment below. And this new forecast predicts a steeper drop in price appreciation before stabilizing at levels closer to pre-pandemic averages. This downward revision comes amid a faster than expected deceleration of monthly growth in their home value index. Of course, we have a balancing of our housing market, and it says here the housing market is quickly rebalancing. We have inventory rising and competition for houses easing. And of course, home buyers right now are facing affordability challenges. And this rebalancing is expected to continue given current macroeconomic headwinds. So let's talk more about inventory and also competition for houses easing. In regards to inventory rising, here's the latest trends we have from altosresearch.com. Again, altosresearch.com, a really good website if you want to look at current housing market trends across the United States here. So here's inventory over the past several years, going back to July 2019. So according to Altos Research, they're saying that the 7-day average right now is basically 508,000 houses for sale. Compare that to 1 year ago, we had approximately 390,000 houses for sale. And back in 2019 or 2020, I should say at this time, we had 646,000 houses for sale. And then in 2019, obviously pre-COVID, we had basically had just under 1 million houses for sale in the US. So the significance regarding this is that at the current levels right now of approximately 509,000 houses for sale, that's approximately 31% higher than 1 year ago. And this is actually in line with what Realtor.com is reporting as well. I might as well share that with you guys as well. For the week ending July 9th, the most recent report from Realtor.com, they said that active listings increased by 28% from 1 year ago. What's most remarkable about the trends we're seeing right now, though, is that ever since April 1st of this year, inventory has basically doubled. So on April 1st, we had approximately 253,000 houses for sale. Now we have over 500,000 houses. So basically in 3.5 months, housing inventory across the United States has doubled. This is one reason why we're seeing our housing market slow down right now, because there's basically more options for home buyers right now. And on top of that, home buying demand is decreasing as well. And speaking of a pullback in home buying demand, have a look at this, because here's the percent of properties with price reductions according to altosresearch.com. So right now we have approximately 33.3% of the properties right now have price drops, which is pretty astonishing because look at 1 year ago. 1 year ago, that share was only 21.6%. And back in 2020, that share was about 25%. Back in 2019, it was approximately 35%. So the levels right now are far higher than the past couple of years, but more in line with 2019 though. What you guys should be aware of though is that the percent of price drops has basically doubled as well ever since April 1st of this year. So on April 1st, we had approximately a 17% of listings that had price reductions. Now it's 33%. So in other words, we've had inventory double in the span of 3.5 months, and also the share of price drops also double in that same time period. In any case, going back to Zillow's latest forecast here, obviously it makes sense that they're calling for a deceleration in home price growth, given the fact we have more price reductions and of course, more active listings. A more aggressive plan from the Fed to raise the federal funds rate and a deteriorating consumer sentiment were key reasons behind the downgrade. Historically speaking, weak consumer sentiment has been accompanied by sluggish home sales. There's also widespread concerns that aggressive interest rate hikes will cause an economic downturn, which would be expected to translate into fewer home sales. To me, that obviously makes sense. If consumer sentiment has been tanking, then fewer people are going to be buying houses and more expensive items. So home sales should decrease because of that. I will say on top of that, mortgage rates have been increasing greatly as well. I mean, at the start of this year, mortgage rates were approximately 3.3%. Now they're just under 6%. They're around 5.7% right now. So because of housing affordability issues, it makes sense that they downgraded their previous housing market forecast. But let's have a look at their previous forecast to see what the reasoning was for downgrading their forecast back in May. So it says here, spiking mortgage rates, inventory gains, and lower than expected pending home sales and mortgage application data drove the downward revision back in May. And funny enough, these are still the challenges that our housing market is still facing right now. All right, so here's my honest opinion about what I feel about their latest housing market forecast here. Let's first talk about home sales. So they're calling for 5.46 million existing home sales, which is actually less than the past couple of years, far less than last year. If they were calling for more home sales compared to last year and also compared to 2021 or 2020, I should say, then I'd be really scratching my head. So I actually think it's good. They actually are calling for fewer home sales in 2022 than the past couple of years. But in regards to their forecast for home values to increase by 7.8% over the next 12 months, I think this is a little bit ambitious. I really think that we're going to be seeing a strong pullback in home buying demand that's going to continue for the last half of 2022 if mortgage rates sustain at current levels of around 5.7%. There's so many indicators right now that's telling us that home buying demand is decreasing. We're seeing fewer home tours, less pending home sales, less total home sales. Also, we're seeing mortgage rates increase to levels we have not seen since 2008, back 1 month ago. And also we're seeing a lot of people deciding to basically put their plans on hold to buy houses right now because We're seeing more cancellations from home buyers, and we're seeing a lot of home sellers reducing their asking prices in order to attract a home buyer. So obviously there's a lot of headwinds that home buyers are facing right now. I mean, right now for a home buyer buying the average price home in America right now, it's approximately 50% higher, or their housing payment is going to be approximately 50% higher compared to January 1st of this year. Therefore, I really think it's ambitious to call for a 7.8% increase in home values through June 2023. But my crystal ball broke a long time ago, and I am not a real estate market fortune teller. But what do you guys think? Comment below. If you guys got any value out of today's video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. Look forward to seeing you on the next video.